Here we go again. Stocks plunge today to start what may be another volatile week for the markets. At issue once again is the future of the U.S. economy. And given how stocks have been trading around the world lately, investors appear to be more concerned that the trade war between the United States and China will linger for a while, further damaging the global economy. All of that fueled another rally into the safety of Treasury bonds, sending some yields to multi-year lows, which some analysts say could be signaling a coming recession. In fact, one strategist today went so far as to say that the Wall Street bear is alive and kicking. That may be a bit extreme, but there is no mistaking how concerned the market is about the economy. By the way, toward the close, there was a technical issue with trading computers. It's not clear if all of the volume was reported or if some of the prices of the indexes were affected. You might see different numbers elsewhere, but these were the numbers we had at the close today, with the Dow down 389 points to close below 26,000. The Nasdaq fell by 95. The S&P was down 35. Bob Pisani starts us off tonight from the New York Stock Exchange.
It was another ugly day on Wall Street, with the Dow plunging more than 400 points at its low. A combination of trade tensions, global growth fears, and geopolitical turmoil is keeping stocks under pressure. And it doesn't help that more big banks on Wall Street are turning bearish and bumping up their probabilities for a recession happening sometime in the next 12 months. Goldman Sachs trimmed U.S. GDP estimates for the fourth quarter, saying they now expect a bigger hit to growth from the latest round of tariffs. They're no longer expecting a trade deal before the 2020 election. Morgan Stanley reiterated its call that stocks will remain mired in a bear market for quite some time, meaning down 20% or more from its recent highs. Bank of America said the chances of a recession have risen to greater than 1 in 3, thanks to weaker data points. To top all this off, geopolitical hotspots are also adding to the overall nervousness. Hong Kong is grappling with its 10th straight week of violent pro-democracy protests, causing the Hong Kong International Airport to shut down. Argentina is coping with the fallout from current President Mauricio Macri's poor performance in the primary elections. The Argentinian stock market plunged more than 30%. The peso shed nearly a quarter of its value. This is a lot for the markets to digest. Add it all up, it's no wonder investors are flocking to safety today and buying bonds, pushing yields lower and putting serious pressure on bank stocks as a result of all of that. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.